This presentation is called My Experience in Investing in Alberta Real Estate, and that's kind of exactly what this is about. So it's not about like selling real estate in Alberta. It's actually just me, myself, as a real estate investor. I've been an investor since 2013, and I'm just gonna share my experience over the next 30 minutes about why I started investing in Alberta real estate in 2021, what I have been doing prior to that, and kind of where I see it going further, and then also some opportunities as well. So just a little bit about myself. My name is Alex Zhvanetskiy, and I'm a realtor with Remax Condos Plus. I'm in downtown Toronto. Before I got into the real estate business, I spent over a decade in Toronto's condominium industry. I worked as the vice president of a service provider that provided services only to condos. Over that time, I've probably been in pretty much every condo in downtown Toronto, whether that was to, quote on services, meet with a property manager, or, we were the provider there. I conducted over 65 condominium assessments. And like I mentioned, I've been a real estate investor since 2013. In 2022, I was in the top 1% out of over 70,000 TREB realtors for condo sales based on sales volume. And if you want to follow me on Instagram, my handle is at alexzed.realtor. The content that I share is about investing. It's also about just basically condo-based content, whether that's buying for principal residence or buying for an investment. So just a little bit of a background in my investment journey. I bought my first property in 2013. It was in Barrie, Ontario. It was a freehold townhouse. At that time, I think I paid something like, it was $280,000. It was in pre-construction, and by the time that the property, by the time I got possession of the property in 2016, it significantly went up. And one thing that I'm a firm believer in is that when you're investing in real estate, you're investing primarily for cash flow. Like, the other things that come with it are nice, appreciation, paying down your mortgage, but it's primarily just numbers. And what I found over the years is that I continued to move further and further out from the Greater Toronto area, constantly chasing that cash flow. So, I've invested in Barrie, I've invested in Kitchener-Waterloo, I invested in Windsor, and then in 2021, I was competing for a property in Midland, Ontario, and it went into multiple offers. The property was gonna barely cash flow. I would have to put a significant down payment down, and what happened is we actually ended up not getting that property, and it kind of was a blessing, because pretty much at the same time, while I was competing to purchase that investment property, I came to know about an opportunity in Leduc, which is a suburb of Edmonton. It's just 30 minutes south of Edmonton. It has an airport. It's primarily a very blue-collar type of community. A lot of the people that work in the oil sands or fly out to the Northwest Territories live in Leduc. And at that time, there was an opportunity there to purchase a pre-construction freehold property, which was 2 units. It had a basement suite and a main level suite, and I think the price for that was about $410,000. Now, up to that point, I always self-managed my properties, and one of the little barriers that I had to really overcome to make that investment was a mindset barrier about having the ability to drive to that property. Like, I have no desire whatsoever to go to Edmonton or to Leduc. The properties that I have in Ontario, I still continue to self-manage. I don't drive out there for things, except just to maybe check up on the property once in a while. But really, like, if my tenants reach out to me and there's an issue, if it's a plumbing issue, I call a plumber. If I don't have a plumber, I Google a plumber. They resolve the issue, and we continue going from there. Now, in Alberta, I had to give up control. So this property in Leduc, I had to hire a property management company. Luckily, the team that sold me the property had a contact in property management, and this was probably the best decision I ever made to move my investments outside of Ontario, because first of all, it expanded and opened the opportunities for me. I was able to get into properties for a significantly lower price point than in Ontario, and these properties were cash flowing. And the fact that I had property management there, like this property has been pretty much hands off, like with the exception of having to occasionally approve an application for a tenant that's looking to move into the property. I have not really had to do much. The property management company charges me 6% a month of the gross rent. That property cash flows. I receive about $700 a month in positive cash flow from that property. And the maintenance, everything is handled by my property management company. So last November, I was looking to invest again. And there was an opportunity through another team in my brokerage to purchase a property in Calgary, Alberta. And it was an opportunity to purchase a pre-construction condominium in downtown Calgary in a building called the Broward. So this is what a big chunk of this presentation is going to be. It's going to be about how I analyzed investing in the Broward versus if I was to do a similar condo investment in Toronto. And one of the things is, like, when I look at Canada and I look at the major metropolitan areas and where people who are high caliber tenants are going to be residing, I primarily see only really 4 options. It's Toronto, Vancouver, Montreal, and the last is Calgary. And there's a large influx, like Calgary's population is booming. A lot of people are moving out there because the housing is more affordable there. Rents are going crazy in Toronto, but they're also significantly increasing in Calgary as well, because there is a strain on them. Like, they're building a lot. And, this is just like a little bit about what's been going on. So this is Canada's immigration plans over the next 2 years. So up to 2025, there's going to be 460 new immigrants are going to be arriving each year. I think this number has increased. I think we're anticipating to have something like 1.5 million immigrants arriving in Canada in the next 2 years. And a little bit about why I invest in real estate. And these are the topics. So it's a tangible in-demand asset. So it's something that you can feel, you can touch, and it's also a basic human need. So, we need food, water, and we need shelter. So when your money is tied to a real property as opposed to a stock, you are much more in control. And when that property is cash flowing, it's a very safe investment for you, because as long as the rent that's coming in is paying your expenses, you're not going to find yourself in a vulnerable situation where you may have a change in your financial situation or a change in your personal life and you have to sell during a down market. You only lose in money in real estate when you sell. And if we look at the trends of real estate growth, this is TREB, so this is for Toronto, but you can see that over the last 22 years, real estate has continued to appreciate and grow, but it's not just a straight line that continues to go up. There are bumps along the road. And one recommendation that I make for anybody who's looking to buy real estate is, unless you're buying a property that's significantly under market value and you have like a renovation company, you're going to be renovating it to flip it and you can do this at cost and make money on it, is buy a property that you can hold for at least 5 years, because you want to be able to take advantage of that appreciation and you want to take advantage of somebody else paying down your mortgage. So the buy and hold strategy, it's try, tested, and true. And it's something that works really well. And, it doesn't take a lot to be able to do this successfully. You just have to make sure that you're buying in a in-demand market that will have the high caliber of tenants available. And, I see for myself, I much rather invest in a city like Calgary versus buying real estate somewhere in Northern Ontario, like in Timmins or Sudbury. No offense to anybody who may be from these cities. It's just that I think that Calgary has a higher volume of high caliber tenants that are going to be able to, pay my rent. And that's what it all comes down to. So for the purpose of this presentation, this is just a little bit about my, story that I've already talked about how I, purchased a property in Leduc in 2021 and how I had an opportunity to buy a property at Broward in downtown Calgary. But what I'm going to be doing is I'm going to be comparing purchasing a pre-construction condominium in downtown Toronto to purchasing that unit at the Broward. So I found something that is quite similar. So this is Queen Church Condos. It's located in downtown Toronto at Queen and Church, and the unit that I bought at Broward is basically along the Red Mile, which is like the entertainment and the nightlife district there. So it's kind of like buying a condo at King and University or King and Spadina in downtown Toronto. Now, if I was to purchase this unit at Queen Church, these are the terms that I would have to agree to. So these are the unit options that I have that are available. It's a 57-story condominium. Units start from $699,000, and they go up to over $1.3 million. The unit that is comparable to the one that I bought at the Broward is Unit 1A. That's the floor plan, and it's basically a one-bed, one-bath. That's about 480 square feet, and it's around $1,600 per square foot. And the purchase price for that would be $775,000. Now, in order for me to purchase that property, I would also have to pay 20% deposit to the builder. So 5% deposit due on signing, 5% deposit in 120 days, 5% in 270 days, and another 5% in 450 days. And if I want to buy a parking spot, I can't buy that for this unit. So if I'm going to be renting it out to a tenant, I'm going to be losing out on that because parking spots are available only to units that are above 3 bedrooms. And the parking spot also costs $125,000. The monthly maintenance fees for this unit are $389, and the monthly property tax is about $408. Now, here is a little idea of the average rent in Toronto. So this is basically a one-bedroom unit, so we can expect that today this unit would rent out for about $2,400, $2,460. However, in 2027, we do anticipate it will be more. And I'm going to get into kind of breaking this down in a few slides. So here is the unit. Here's the building that I bought at in Calgary. This is called the Broward. It's 15th Avenue and 2nd Street Southwest in Calgary, Alberta. It's basically in their entertainment district. It's a 6-story condo. It's going to be completed in 2027, end of 2027, December. And it's about $800 per square foot. So already off the bat, it's about half the price per square feet. In order for me to purchase this unit, and actually here's a little bit of a breakdown. So the purchase price was $439,000. The monthly maintenance fees are about $229. The price and the deposit structure is a lot more attractive. So it's only a 10% deposit. And also I got all of these perks as well. So some of the perks that I got with buying this unit was a free parking space, a storage locker for free, which was another $5,000 value. There's a 2-year rental guarantee and 2-year free property management that's been provided here as well. And what this essentially means is that whether I have a tenant or I do not have a tenant in that unit, I'm going to be receiving a payment every single month through the property management company for the first 2 years. That's the 2-year rental guarantee. They also waived the condo fees for the first 2 years. I can also do an assignment for free on this unit. So for whatever reason, 2027 comes along and I am not in a position that I want to close on this property, I can assign it. So I can literally sell the contract to this unit to Carmelo, and he can close on the property and he can take possession of the property, and that can be his property. And generally when assignments are done after 3-4 years, that you can even make a profit on just doing that, because real estate does appreciate. And there's also a free hassle-free MLS exit that was available with this as well. So if after the 2-year rental guarantee and 2 years free property management, I want to sell my property, all I have to do is pay the buying commission, which is 2.5%, and $500 for the selling. So I don't have to pay the selling commission, and they will list the property for me on the MLS and sell the property for me. So, it seemed like pretty much a pretty clear decision for me from all perspectives here. This is just a part of my purchase agreement. So you can see that here is the rental guarantee that I'm receiving with this unit. So with this unit, I'm guaranteed $2,199.50 a month rent. My management company is going to be Empire 81, And again, whether I have somebody living in that unit or I don't, I'm still going to be getting this rental guarantee, which is great peace of mind. So here is how I break down, this unit at Queen Church versus the unit at the Broward. So the purchase price. So the purchase price for the Broward is 440. The purchase price for the unit is 775,000. If I need to do a 20% down payment when I'm going to be closing on this property, on either property, because it's an investment property. So I would need to do that to get the mortgage. However, the deposit that's going to be due prior to closing on that property is in Broward's scenario is going to be only 44,000 because it's only 10%, and that's going to be due in 365 days and nothing else until 2027. While the deposit for Queen Church is going to be the full 140,000, which I'm going to have to pay within 450 days. So it's significantly, more to buy this property. The maintenance fees are going to be 389,000 for Queen Church, while it's going to be 229,000 for the Broward. If the Broward, I'm also going to get the rental guarantee. I'm going to get the property management. I'm going to get the free assignment, free parking and locker. And at Queen Church, I'm going to get nothing. I can't even buy this parking spot because it's a 1-bedroom unit. Now, here's how the cash flow breaks down. So the rent today in Toronto for a 1-bedroom condo without parking is $2,400. We're going to assume that based on how much rent has gone up over the last 2 years, is going to continue to go up pretty significantly. So, for this calculation, I made an assumption that my rent for Toronto is going to be $3,100 in 2027 versus that $2,199 a month rental guarantee that I'm getting at the Broward. But if I take my $3,100 rental income, I subtract from that my mortgage payment, which at 4% is going to be almost $3,000 a month. And, today we're in a high interest rate environment. So, I'm basically just making a call here that the mortgage payment will be at and around 4% in 2027, just based on averages. And then I add my property tax, my condo fees, and my landlord insurance, which is an estimated $70 a month expense. I'm going to be at least $713 out of pocket every single month to cash flow that condo in downtown Toronto. While when we compare the Broward, I'm going to be actually making $318 a month, and that I'm rolling into that $229 no maintenance fees for the first 2 years promo. If that promo didn't exist, I would still be cash flow positive $89 a month. So I will have this property. The property is going to be paying for itself. The only closing fees that I would have to pay in Alberta are the legal costs. There's no land transfer tax. While in downtown Toronto, I'd have to pay 2 land transfer tax, the municipal and the provincial, and then as well as my legal costs. So it's going to cost me significantly more to close. And look, Toronto is a great investment market. Real estate continues to appreciate in Toronto, but it's a much more mature market. So when investors are buying a property in the Greater Toronto area, they're buying for appreciation, and they're buying knowing and expecting that they're going to have to top off those payments, and that's calculated. And that might be great for some, but it can be risky for somebody, especially a newer investor or somebody who's working with a more limited budget. I always recommend that if you're just getting into this, cash flow is always the way to go, because it protects you, and it helps you dictate when you sell, and when you sell, it's going to be on your terms and not just because you had some unfortunate situation happen and you're being forced to sell. So just to kind of summarize, here are the perks that I received with this property in Calgary, and these are the perks that are being offered now by this builder for different projects. So the projects have between a 5 and 10% deposit plan. They include free parking, free lockers, no condo fees for 2 years. There's suite upgrades that come with them, hassle-free MLS exit, free assignment, and there's also a rental guarantee, which is about it's like that. You can value the rental guarantee and the property management, in that as well. Just a little bit about how real estate has done in Calgary. This is Calgary's residential benchmark, so you can see that real estate in Calgary is also appreciating, maybe not in the same range as Toronto is, but Calgary hasn't experienced their population boom, or hasn't started experiencing that until about midway through COVID. And when I look at Calgary, I basically see where Toronto was in 2004. These are some stats that I got online. It has the highest wages per employee in Canada. There's a very low cost of living for any major city in Canada. There is an international airport, which is a huge plus, because what that does is it attracts company headquarters to move into that space. There's no HST and no land transfer tax in Alberta, and there is a very favorable landlord legislation there. So we do hear about kind of these horror stories that happen in Ontario. I think that, for the most part, probably 99.9% of tenants are good people. It just sometimes you hear about that one situation and it gets so much attention that and so much media coverage that landlords start to kind of almost get paranoid and think that tenants are just out to kind of get them or screw them. There's no rent control in Alberta, while in Ontario there is rent control, but that rent control is for properties that were occupied for residential purposes prior to 2018. And in Alberta, the only closing costs are the legal fees, which are going to be roughly $1,400. There's just a little bit more information that I got online from the Alberta Real Estate Association. So these statistics are for March. I should update them to provide them for May. But the real estate market there is quite healthy, and prices are going up significantly. And this is fueled by the population growth, and rents are going up significantly there as well, because a lot of people are moving out there. There's companies that are literally like this one, like DH Canada, that basically relocated their manufacturing plant from Toronto, and they're going to be relocating it to Calgary with a roughly 1,500 personnel. They're going to be being transferred there as well with their families. Amazon invested $4.3 billion in the cloud computing hub. So Alberta is really, they've learned from their mistakes, and they're diversifying their economy. They're getting themselves in a situation where they're not as dependent on, oil prices as they were, 5-10 years ago. There's a green plant that's being built as well in Calgary, where, basically rural wheat farmers are going to be able to convert low-grade wheat to energy. So there's a lot of investment and innovation that's happening out there. It's really an attractive environment, especially for startups and for IT companies, because there is pretty low office space, and it has an international airport. The office space there, I believe, is like half of what it costs in the Greater Toronto area. A bit about being a landlord in Alberta. So this was very attractive as well. In Alberta, there's no rent control at all. Fixed term tenancies end at the year of their expiry. So in Ontario, when you have a tenant that signs a 1-year lease with you, after the 1 year, they go month to month, and they don't have to move out of the property. Alberta also permits security deposits, which Ontario doesn't. Pet provisions are enforceable in Alberta, where in Ontario, pet provisions are not enforceable. The only way that they can be enforceable is if it's a health and safety matter, or if it's a condominium that has restrictions or rules around the type of pet. And the landlord-tenant board wait times in Alberta are about 2 to 4 weeks, while in Ontario, they're 8 to 10 months or even more than that. So the legislation out there is a lot more landlord favorable, and the types of products that are being sold there are very investment friendly. The Broward, where I purchased my unit, has sold out, but there are other projects that are available. This is the sister building, is Imperia, which is around 3 minutes walk from the Broward. It's going to be completed in 2028. Units start in the low 400s. They do have a promotion right now. The 1-bedroom units can be purchased with only a 5% deposit until 2028. It includes pretty much all the same perks that I got at the Broward: 2 years free rental guarantee, free property management, no condo fees. There is no free parking spot here, though. The parking spot is $30K, though, if you want to purchase a parking spot with this property. There's also Orson, which was just launched 2 days ago. This is at a lower price point. This is in Southeast Calgary. You can get a 2-bed, 2-bath under $400,000 with free parking and a locker, and includes all the same incentives pretty much that I got at Broward, like the property management, rental guarantee, free parking, free storage, free assignment. And it's only a 10% deposit structure. So like if somebody was to purchase, a unit at Orson, they would essentially just have to provide $10,000 deposit into the real estate trust account of the builder. And that's another thing to keep in mind, is that, the deposits that are made, the builder doesn't actually use those funds to fund the project. They're kept in a real estate trust account and only released to them when the project is completed and you get your unit. But it's $10,000 on contract signing. Then after 30 days, you need to pay the balance of 5%, then another 2.5% in 180 days, and another 2.5% in 365 days, and then nothing else until 2028 when you go to get your mortgage. And there's also freehold options that are available in Alberta as well. They close a lot sooner, like between Q2 and the end of 2024. There's townhouse projects, there's duplex projects that are included. They also they don't have a rental guarantee, but they basically have a rental assurance program where they use the market rent, and they guarantee that you will get that rent as long as you have a free property management company. Sorry, as long as you have a property management company managing your property. So meaning that if they say that you're going to get $2,900 a month in rent and you only get $2,700, they're going to top you off every single month until you get to that. So just a little bit about kind of what's going on there. So yeah, thanks for everybody's attention, and I'll just open this up to some questions. It's a lot of talk.
Great, a lot of information, Alex. How do we get access to those other projects?
So I've recently started to work with the team that sells these in Alberta. So I mean, you can always book a call with me if you're interested in that. I think that, did you post the link? Yeah, there's a Calendly link in the chat, so you can always book a call.
I'll just post that again right now. There we go.
Yeah.
So it's just calling you, and then you have access to see what's available.
Yeah, basically, yeah. So so I started working with them because this is a product that I truly believe in. Like, I've had people that are not homeowners in Ontario purchase this, even just as a way to diversify. People that have been investing primarily in stocks and commodities that want kind of a safer play where it's actually your money is being backed by a physical hard asset. So I believe in this. I'm going to continue to invest out there. I think that there's good opportunities there, especially now while we have a foreign buyer ban for the next 2 years. So I don't know if that influences it or not, but people are going to continue to move into Canada. I think out of the G7 countries, we're experiencing, the highest population growth. And a lot of people that are moving into Canada are already, high skilled. They have good paying jobs. I mean, I guess really the only barriers to them is that they need to maybe wait for permanent residency until they can get a mortgage. But, a pre-construction property that's not going to close for, it's not going to be completed for, 2, 3, 4 years is, kind of a way for them to secure themselves. Yeah,
it's a good example comparison with Calgary and Toronto. Obviously in Toronto, like, you're cash flow negative, and I noticed when you gave that example, you're cash flow negative by $700, but you still have to do all the work as a landlord. If you had property management fees in Toronto, how much would that be? Same 6% or
6 to 10%? Yeah.
So that would be even more negative cash flow negative.
Yeah, I guess I can add that too. Yeah, I can add that as well.
It's kind of apples to apples. Like, again, in Calgary, property management does all the work.
Yeah.
Like, your property in Leduc, you mentioned, they only contact you for a new tenant to approve them.
Yeah, pretty much. Yeah, like, they only call me to, like, okay, one thing about, like, my property in Leduc, and I see there's a question, I'm going to answer that question in a sec, but one thing about my property in Leduc is, like, full disclosure, I mean, I've had more turnover there than I've had in my properties in Ontario, just because Leduc is a more transient city. Like I mentioned, a lot of the people that live out there work in the oil sands, and they just, like, fly up there for 2 weeks, they fly down. But my property management company, like the property hasn't been sitting vacant. Like they've been able to find me new tenants. A lot of times, if somebody's ending their lease early, which I had happened, I think once or twice. Like I've only owned the property for 2.5 years, but they basically held that person and their deposit and said that they're responsible to continue to pay the rent until they find a new tenant. And luckily, every time, like basically within about 2 weeks, they had a new tenant. So there's been a little bit more turnover there than I've experienced in Barrie or Waterloo. Like Barrie, I've had the same person living there since 2016, which is actually not great because like I've been increasing the rent every year, but he's paying me like $500 less than what the monthly rent should be right now if I was to just put it on the market. But he's a great guy that looks after the property well, and I like him, and I'm not gonna say that like my mom is moving in there or something like that. Like I don't roll like that. Like it's about kind of treating people well. So he's been good to me. But yeah, in Ontario, I usually have maybe like a 2-year hold on tenants.
We do have a question, Alex.
Yeah.
A question by Lovelet. Great presentation. Can you further explain how the 2-year rent guarantee works? Who would be paying the 2 years of rent?
So, Lovelet, great question. So my property management company will be paying it for me through my tenants. So basically, think about it like this. A new building gets completed. Probably half of the people that bought in the building are going to be investors. So there's going to be 100 units that are going to, like Broward has about 103 units. About, let's say 50 of those units are investor units. They all hit the market at the same time. So supply and demand, properties, you have a bunch of units available in the building. It might take a little bit longer to occupy those. Like instead of, getting tenants within a week or two, it might take you a month or two. Well, the property management company is going to be paying me that rent from interim occupancy. So from the day when I get the property, whether they have a tenant in there or not, they're going to be paying me that. And the way that they're going to be paying me that is that they're actually going to be charging higher rent. So basically, rent at that time in Calgary, in downtown Calgary, for a 1-bedroom condo with parking and a locker in a new luxury building is anticipated to be substantially more than $2,200. But they average it out. But one thing that I may do is at that point, like, for me, I have a little bit more of a comfort with this. So I'm going to basically explore just hiring a real estate agent out there and telling them list this on the MLS for me and find a tenant for me. Like if the rent's going to be much more like significant, like if I can get an extra $400 or $500 a month for doing that. But for the way that they package this is they just made it so appealing for landlords. Is like it's basically hassle free. Like from day one they will pay you this rental guarantee whether they have a tenant in there or not. And the way they do it is they manage a bunch of properties in there and they average it out. So that's how they kind of cover the costs. I hope that answers your question.
I understand it. They're managing so many different units. They know at any given time one would be empty, but they're getting rents 20, like I said, 2,400. Well, that one unit that's empty, they have that extra money to pay that.
And they're building a relationship with you as well, right? Because like realistically, I mean, a lot of people are going to continue to hire a property management company after their 2 years of free property management is done. Really, it's a condo. So, I mean, if there's I don't know, the sink is leaking, you can Google a plumber in Calgary and dispatch him there. But some people want to have it hands off. Some want to have property management. I have property management for my property in Leduc because it's a house, and there's more things. There's lawn maintenance and all these other things as well. Will they manage after 2 years as well, or only for 2 years? So fancy, they will manage for 2 years for free, and then you can hire them after 2 years. And it's going to be about 6% of your monthly rent is going to be the cost if you want to hire that property management company. But you'll also have an opportunity to shop around and maybe find a property management company that will charge less, or you basically have options. So you can keep them after 2 years, or you can find a new company, or you can just decide that you want to self-manage after that point. You're welcome.
Hey, Alex, great presentation. I just wanted to ask, how do you determine which developer to believe in? Because obviously they can, delay your project by a lot of time, by a couple of years.
So the reason why I, decided to believe in Truman Homes is because it's a family-based builder that's been working in Calgary for over 40 years. They have a history of they haven't delayed any projects, and they also own their own trades. So what this means is that they're not relying on other companies, other plumbing companies or other whatever roofing companies. They just have their own trades that they just send from project to project. So I did that. I did some due diligence, and that's also why, like I mentioned to Carmelo a few minutes ago, I now work with the sales team at my brokerage that offers these pre-construction properties, and we exclusively sell Truman properties because they offer all these incentives and they have a great reputation, and they haven't let us down. And there's a lot of information you can get online as well, right? Like on the internet, you can do due diligence, you can see consumer reviews, people's experiences. And one thing to also be aware of is that, I know that in the GTA, we've had projects that have been delayed. We've had projects that got canceled. But when you put a deposit in, that money is being held in a lawyer's trust account. It's not being given to a developer to use. They basically have loans that they take out from the bank for constructing that property, and it depends on how they're progressing in the construction. So they'll basically say, okay, you have to get up to this point, we'll give you more money. You get to this point, we'll give you more money. So if, for example, in the GTA, like these projects that got canceled, the people got their money back. It was in a real estate trust account. It's not like the developer ran away to Mexico with their deposit. So that's also something to just be aware of, which I think is like, because of the way that the media sometimes puts headlines, like, the headline says one thing, but then you read the article, it's like completely different. But a lot of people just kind of go based on the headline too, right? So, but that's a great question. But yeah, just because they have that great reputation in Calgary, that's why I decided to go with them. And they also have this kind of bundled opportunity where it's just very easy to invest with them, and it's like basically it's like they've thought of like everything that an investor would want, and they kind of created a package for it.
Yeah, so they kind of mitigated all your risks and that. So Orson and Imperial is also from Truman?
Orson and Imperial are from Truman. So basically, so they just sold, so Broward was their project in downtown Calgary before Imperial, and now they're starting to build Imperial, starting to sell Imperial, which is just beside Broward. And then Orson is in Southeast Calgary, so it's a more attractive price point, but also keep in mind that kind of like location is really important in real estate as well, right? Like the population grows and people are going to be moving to, just like how we have people live downtown and live in Mississauga. Investing in a condo in Mississauga is still a great investment, but downtown Toronto is downtown Toronto, right? So it's a big difference, right? So that's also something to keep in mind. But yeah, Orson has more attractive price points because like literally you can get like a 2-bedroom under $400K. But Imperial, it's about in the mid 400s, but they also do have a promo now. If you're getting a 1-bedroom unit, you can just do a 5% deposit until 2028.
That's pretty cool. Thanks,
Yeah.
Alex.
Yeah, no problem, Jeffrey. Thanks for the question. Thanks for turning on your camera too, because I'm just speaking, except for Carmelo, I was just talking to a bunch of letters. I just have SLAP. Appreciate that. Yeah.
Sure.
Does anybody else have any questions? Or Jeffrey, do you have any other questions that you want to kind of ask?
Yeah, I do have another one. So how do you determine which type of condo you want to buy? Or for example, Orson obviously has a lot of options, maybe like a 1B, maybe a studio, maybe a 2B. Is it, do you just run the numbers for each scenario and see, okay, this makes sense for me the most? This is where I can benefit the most, or is it kind of like, how do you determine?
So we basically use a cash flow calculator that if you want, I can share with you after. Like if you just maybe message me either through Meetup or on Instagram, or just like email me here. I'll put my email here actually.
I could also, I guess, add you on LinkedIn.
Yeah, you can add me on LinkedIn as well. And I can send you like our cash flow calculator. So you get more cash flow with the bigger properties, but it's a little like the price is more expensive, right? So it's kind of like affordability. So, if you're going to be buying like a 2-bedroom, most likely you'll be renting to a family, or a 3-bedroom you're going to be renting to a family. If you're going to be buying a 1-bedroom, you're going to be renting to most likely a single professional, right? And turnover is not always the worst, as long as you have like, every 2 years, if your tenant moves out, that's pretty good, because you can just charge higher rent and all of that. But in Alberta, there is no rent control, so you can always kind of increase your rent to market rent after the year, unlike in Ontario where it's regulated. But yeah, like it's just affordability, cash flow, and I guess the type of tenant that you want to have in there and appeal to. I mean, sorry, go ahead.
Yeah, I was just gonna ask, like, do you have a personal preference of what type of tenant that you want to rent out to?
I like single professionals, just because they tend to kind of, move out, and it's a little bit less maybe wear and tear on the unit too. But like I had, for example, like somebody that bought a 3-bedroom condo at Horizon, which is sold out, but their intention is they're going to rent it out, and they may actually end up like relocating there. So like there's like kind of like that as well, right? So like everybody has a little bit different motivation, and like what is their long-term plan, right? So yeah.
Yeah, fair enough.
Yeah.
Thanks, Alex.
Great questions. You're welcome, Jeffrey.
You mentioned the maintenance fees, $229 a month.
Mm-hmm.
So what is the average increase over time, say, like yearly or in the next 2 to 3 years? Because that usually goes up, right?
It does. So when the condo first gets completed, the maintenance fees are basically like the developer's maintenance fees. So they're kept quite low because there's like less, less requirements, right? But then as the condo gets turned over and gets registered, they need to hire like another cleaner, or maybe like they want to have 24/7 concierge, or this expense goes up, or lawn care. So usually from the first to the second year, or to the first to the third year, there's maybe like a little bit of a more significant jump, especially like my experience in Ontario, maybe 10%. But then year to year, maintenance fees usually just kind of keep up with inflation. So they go up about 2 to 3%. We experienced something pretty significant like last year in a lot of condos, where maintenance fees in the Greater Toronto area went up like 7 or 8%. But the reason why that was is because a lot of these condos deferred increasing their maintenance fees during COVID, just for their, to kind of help the people that are living there. And also we had like 2 minimum wage increases in the last 3 years. So that plays a significant role on the service providers and how much they because they have to pay their staff more. The owners have to pay more as well, right? So yeah. So hope that answers your question.
Yes, it does. What about the common space? Like, is there a gym?
Yeah.
Okay.
So they have amenities. So like I didn't include it in my deck, but like for example, the one that I bought, I think there's like a restaurant in this building, rooftop terrace, gym, party room, kind of like similar. Like it's similar to the amenities that you get in downtown Toronto right now. I like the fact that there's a restaurant, because like very few, buildings in the Greater Toronto, like when I think about a condo that has like a restaurant in there, it's just like, I think it's more of a prestigious type of building. It's like more like a boutique type of look, almost like a Yorkville property. But yeah, it has all those amenities, and I can find out more information for you, or send you a link if you're interested in kind of finding out what has what amenities. I can always forward that to you. I have my email address in the chat if you want to send me an email or connect after the presentation. Happy to share that. But yeah, it's basically it's like the same standard of condo as you would get in Toronto.
Okay, thank you.
You're welcome.
I got a question, Alex. At what point does it go from the developer to property management, to managing the property?
Well, so the developer has their own property management company generally. There's like like in the GTA, for example, First Service is a very common property management company that developers use. And the reason why they use First Service in the GTA is because they have security, cleaning, and property management that's provided by that company. So it's a lot more easy for them. They just hire one company that takes care of everything. And First Service is an international company. I think their headquarters is in Florida or something, but I don't know like what the company is that going to be managing these. But there's property management right away. But it's just like when the condo corporation gets registered and turned over, there's going to be a board of directors is going to be formed, and the board of directors are the elected unit owners. There's usually at least 3: president, treasury, and either vice president or just like another board member. And then they can kind of have decisions on, okay, well, we want to hire a more upscale concierge company, or a different property manager.
Okay, so when the property is completed, the property gets a board management, property, like the people who live there.
Interim occupancy, yeah.
Yeah, they create their own management. Then from there, they decide if they're going to actually have the same property management or someone else.
No, they don't create their own management. So under a condominium act in Ontario, you have to have board members, right? Yes. So board members are elected unit owners. They're elected at the annual general meeting. So they basically direct the operation. A condo has to have property management. So from the second that it's an interim occupancy, there has to be a property manager in place. They have to have a cleaning contract. Depending on the building, they have to have a security contract and a concierge contract. But what I'm saying is that when the board gets formed after the condo's been registered, they may have their own ideas about they don't like ABC company, they like XYZ company, so they might hire another company.
So during the occupancy, the property still being built, the developers has their own property management to clean it and take care of it. Yeah. But then afterwards, once the board members are elected, they choose to stay with the same one or get a new property management to actually run everything.
Yeah, exactly. Because the developer hands over, because control is handed over from the developer to the board of directors, and they may have their own things. Like a lot of times, I mean, I don't want to get into condo politics because it makes me feel like I'm back in my full-time job before real estate. But like a lot of times, board members and residents don't like the builder's property management company because they think that they're providing, like bad service, or they're kind of like not looking after the building or whatever. They have their own kind of little agendas and things that come up, right? So it's quite common that when a condo gets turned over from the developer to the board, they switch the property management company. And in fact, a lot of the larger property management companies in Ontario have a special team of property managers that goes into new build buildings, because there are things like carry-on warranty items that they have to make sure, like you can't just put like a rookie manager in there. They have to kind of know all these timelines that they have to keep up with. And by the way, like these properties, there is new home builder warranty in Alberta as well, just to all the attendees. It's not called Carry-On, it has a different name, but in Ontario it's managed by the Carry-On Corporation. So when you buy a new home, there's like 7 years of warranty in Ontario, and up to year 1, it's like everything, like including like cosmetic things, or little nail, like I don't know, screw holes in the wall, in the drywall, and all this other stuff. And then as it gets older, like the building gets older and older, then the warranty and what's being covered wears out and out. And then after 7 years, there's no more new home builder warranty. But condos do have a reserve fund, and they have to have reserve fund studies where they bring in engineers every 2 years that kind of do a study based on like what kind of maintenance the building has to budget for, and making sure that appropriate funds are being put into the reserve fund so that they can budget for replacing the elevator in 15 years or changing something else, some other major repair, whatever it might be.
Thanks, Alex. Great information tonight.
Yeah.
I can find you on both Instagram and your email and the calendar link if somebody wants to call you.
Yeah, Calendly, if anybody wants to book a call. If you want to connect on Instagram, that'll be great. Email me. You can find me in the meetup group. I'm not hard to find.
No, you're not.
Yeah. Okay. I guess if there's no other questions, just let me just see. Does anybody have any other questions? Or
just want to say thank you. Good information, and I'll reach out to you if I have any other questions.
Amazing. Thank you for your feedback. Thank you for feedback. Thank you, Vlad. Thank you, Shreya. Okay, everybody, enjoy the rest of your evening, and yeah, thanks, Jeffrey. Have a good one, everybody. I'm going to stop the